All right. The NFP numbers came out,
Mhm.
and basically it was stronger than they anticipated. So the job market is strong right now. Inflation is still super high,
Mm.
so that means that you're going to get rate hikes, and every Fed member, every Federal Reserve member that spoke this past month, they all spoke of double-digit rate hikes. So whenever they hike the interest rate, they normally do it a quarter of a point at a time. So a 0.25. Well, they're all talking about doing half points, and they say that we need multiple half point increases. So that means over the next, over the summer, we could see two rate hikes at 0.50, which is pretty significant. But you have to hike the interest rate up in order to beat down the inflation. So it's a double-edged sword, because if you raise the interest rates too high, then businesses won't borrow money because it's too expensive to pay it back, especially when you're speculating that when you borrow this money, people are going to come shop at your business. So, in general terms, it's kind of like the prices of cars. When you raise the price of those cars, or when the bank raises the price of the loan that they're going to pay you for a car, or that they'll give you for a car, some people say, well, I don't want to pay that much money per month for this car. Same with the home. You don't want to go buy a $300,000 home if you have to pay, you know, 3 or 4%, 5% interest. But that's where we're headed because we gave out so much free money during the pandemic. Um, I know everybody has an opinion. I don't know what side of the aisle you're on politically, here in the US. But it doesn't matter. I think the overarching thing here is this has never been done before. No one has ever reopened the entire economy, not here in the US, not in the world. And that's essentially what we've all witnessed. The world shut down, the entire world economy shut down for months, you know, but everybody still got a paycheck. And then we restarted the economy. Everybody went back to work. So all that free money that was out there in circulation has to be taken out of circulation. And until it's taken out of circulation, the interest rates are going to be super high. You're going to pay a lot more for things that you wouldn't normally pay for. And to exacerbate that issue, Russia invaded Ukraine. So you add the cost of that war in with the inflation, and everything is super high. Um, we're all experiencing that pinch when we go to the gas pump, right? So there's a direct correlation, between inflation, war, and what you're paying for fuel, petroleum, gas. So I guess we can just look at the US oil right now. Unless you're living under a rock, you see what's happening here, right? So I haven't changed this oil analysis. We're going to go to 130 here pretty quick. the price creeped up to around 120. So we're $10 away from 130. Um, that means we're probably $10 a barrel away from $7 a gallon gas here in the United States. Um, but all the talking heads, the professionals, the people out there who analyze this stuff say that they expect oil to be at 150. All right. Once oil hits 150, some people will have to decide whether they're going to go to work or they're going to buy groceries. And it's a sad state of affairs, but it's not avoidable, at this point, because of that war. Russia supplied a lot of the oil for the world, not just Europe, but for the world. So somebody has to either replace the oil that we're losing, in Russia, like namely Venezuela, but we've blackballed them, or OPEC has to agree to produce a lot more oil than what it's doing. So it'll be interesting to see going forward how that shakes out. But until then, I think it's safe to say that you either go buy an electric vehicle or you get a bike that you can pedal, or you're going to end up walking or using public transportation to get around. But everybody should be looking at alternative measures, at this point, whether it's carpools or whatever. As an American, we kind of look at these things, or sometimes we don't pay attention. We just know the gas is high, we complain, and we keep doing what we're doing. But now that you're a trader and you understand the driving factors in these prices, you may want to get you a long-term plan on how you're going to combat some of this inflation. It'll make you a better person financially going forward. And the second thing is, we don't know how long this will last. Like, we could be in the very beginning stages. We've been talking the last couple of weeks about recession. If you get these high prices and then there's a recession, man, you could be in a world of hurt. And then this winter, when you need to heat your house, you won't be able to afford your electric bill. So, please don't take this lightly, like, oh, this won't affect me. It may affect your family, may affect friends. Just kind of pay attention. Trade oil if you have to. It's a volatile commodity, but you can analyze it like anything else. So where it is right now, I want to see it pull back a little bit. I see a healthy little imbalance right here on the 12-hour. This is an even better one on the 4-hour. Even bigger on the 2-hour. I would kind of trade this from the 2-hour. I'll look for it to test this 2-hour imbalance before it pushes to the upside. All right, this gives you a little flexibility here. You can wait until you get a little rejection. Maybe you can trade it down, which would be a natural hedge. And then once it touches, you can buy it back up. But oil is definitely going to 130, probably within the next week or two. Then maybe we'll get a bigger pullback, once it hits back up here at 130. See how it initially went to 130 and it fell, and now it's pushing back up. So this was basically on a larger time frame. It wicked, right? Came back down. So the market showed you where it was going, and now it's just working its way back up there. So if you're looking to trade oil, then I would just wait for it to pull back. It wicks a lot. I think there's a wider range of you have a wider area of stop that you need to look at when you trade oil than you would normally trade on a regular currency. Okay. I've been kind of working on my shorter term trading in terms of, I call it scalping, but it may not be scalping for some of the rest of you guys, but I've been trying to scale down to the 1-hour and then trade the 15-minute chart. And what I found is I think I'm decent at it, but a lot of times I overtrade. And so, I use my demo. I don't use my funded account to do it, but it's still the same, right? Like, I always get on my son about overtrading, but it's overtrading is real, man. If you don't have a plan, and it's kind of hard for me to develop a scalping trading plan because I've never done it. But you need to have some definite goals, right? A daily percentage, maybe a you know, a monetary uh number. If it's $100, $30, um, $1,000, depending on how big your account is. I believe that if you don't have a goal, a number that you're trying to hit, then the chances of you over trading are probably great, right? Um, so here we are, halfway through, or almost halfway through. The end of this month will be halfway through 2022, and it's really time to kind of self-reflect. Where are you um, as a trader? Have you accomplished your goals as a trader? Have you, no doubt you should be getting better. Hopefully you can see yourself getting better, but um, trading is like driving. If you're going to somebody's house in Connecticut, chances are, even if you get to Connecticut, you'll never get to their house because you don't have the address. So your trading plan is kind of like the address that you can throw in your phone or whatever. Back in the day, I'm old enough to remember not having phones. You had to pull out the map that you bought at a gas station, and you had to look and kind of plot the course out before you got on the road. Or sometimes you get on the road and you'd have to buy a map, when you got to the place that you wanted to do your turnoff, or prior to doing your turnoff. It was a lot more inconvenient, but I think people were better because of it. You kind of knew what highways you had to look for. Now, people can't tell you what road they took. They just know their phone brought them there. So you need to start plugging in a plan, or you're going to look up in this 2023 and you're in the same spot. You're still struggling. You're still trying to figure it out. You're still showing up at the meeting, relying on what I'm saying or somebody else is saying about what the price is doing on a chart. For a long time, when I was in Ruby's class, I kind of relied on her analysis. And there's nothing wrong with comparing somebody else's analysis to your analysis, because maybe they see something that you don't see. But there's a problem whenever you can't do your own analysis. Because I'm not promised tomorrow, neither is anybody else who might be doing analysis, but you'll be able to go on the charts and you can see your own setups. And there's a million different ways to trade the setups that you see. So I just want to encourage you to write a plan out, like develop a plan, come up with some numbers, right? A goal that you're trying to make that week. Shout out to Will, shout out to Justin, Brianna, Alicia, for all hosting, trying to help point things out and make you guys successful in the way they trade. No matter whose strategy you're trying to employ, or no matter whose method makes more sense to you. Shout out Fred, Fred does incredible analysis on Nas. But no matter whose method you're trading, please come up with solid strategies, that's going to take you to the next level, that's going to grow your account. Everybody's not going to grow at the same rate. So, stop chasing $5,000 a day. Start off with $50 a day. Make that happen. Repeat that over and over and over. Once you can make $50 a day, you can make 5 million a day. It's just a matter of time. And Fred will tell you, altcoin, the one that does Nas, that the way he got started was a buddy of his was making a lot of money. So he started doing the same strategy, but he would do it with a lesser amount of money. And then it wasn't long, he was making 8K a day. I remember it, you know. And he would quit, you know, once he made his money. So it is very simple, right? You don't have to know 1,000 different strategies. All you have to do is understand one or two different concepts, and you can go look for that concept over and over and over, and trade that one concept, and you can trade your way into a better life, right? Time freedom and all that good stuff. So, you know, what I was doing was I would analyze the market the same way I normally do. And then I would just scale down to the 1 hour chart. You see these last 4 hours? Let me see if I can find this. I'll trade this on the 15-minute time frame. So once I get this first order block, I'll buy it up, right? Now, the thing is, you don't know how high it's going, but if I can get 2 or 3 15-minute candles, I'm good, right? It could be something as simple as that, right? You get the order block, you trade it for 3 candles. Doesn't matter. This 4th candle is a lot bigger, I know, but chasing this 4th candle might break you, right? Maybe these 3 little candles go your way. And if you get these 3 little candles on 3 or 4 trades every day, you'll trade yourself out of a job, right? This small pip count, you know, and I don't know what your account size is or whatever, but if you understand what I'm saying, this is 70, that's 70 points on this index or whatever, or that's 70 points. 70 points a day, right? Every other day will trade you out of a job. And the thing is, if you don't ever write it down, you would never know that, right? This looks like it's insignificant. But if you every day you come to the market and you just get 3 candles. 3 candles can feed your family every week. You get you a funded account, trade 3 candles. Every day, 3 candles. These 3 candles, you know, that might be 100 pips. It might be 50 pips. It's pips, right? You don't need a lot of them to live a great life. So that's what I've been doing. You know, trying to come up with a shorter term way to trade, right? You know, during this war, it's more difficult to hold a trade for a week. I don't mark up the high and low. Now, there's nothing wrong with doing that, right? Like you kind of have to look at the market the way you look at it. I've never really cared about highs and lows. I hear people talk about it, but for me, it's a non-factor. For me, well, let's look at something. Let's look at a pair real fast, and I'll show you what I'm talking about. So if we go to GJ, right? Let me start off with a lower time frame, because this doesn't have to. All right. So, a couple of weeks ago, we had a discussion on these moving averages, right? Some of you guys may have been here, maybe others weren't, but what we talked about is this golden cross right here. And then there's a death cross when price is going down, right? So when this price crosses, this is a golden cross. The next candle closed above the price, which is an indication that price is going to keep going to the top side. Well, I hear you, Martha. I don't necessarily agree with that, but as long as you're comfortable trading it, that's cool. All you have to do is find a pair that works for you. I look at all the pairs. So, it's others that I like better that are less volatile than oil, but volatility pays, right? So as long as you're successful, that's all that matters. But for the strategy that I'm talking about, or that I'm looking to employ, right? If I look at my higher time frame, price is pushing to the upside, right? Like anything else, I want to see a pullback. So I can scale until I see signs, of the pullback. Market went up, it pulled back. The market went up, it pulled back. The market went up. This is showing me signs of exhaustion, right? And if I keep dropping time frames on the 6 hour, I get the bearish order block, right? On the 4 hour, bearish order block. On the 1 hour, price is actually dropping. These are just moving averages. All I do is change this number. So remember I was telling you about the 13 and the 9, 13 and a 9, I kind of just measure the trend, right? When the price comes to the trend line, it normally pushes back up. Whenever I'm expecting a pullback, right? I can kind of use it as confluence, right? So price is pulling back. The thing is, how far is it going to pull back, right? We don't know. So there's a couple different things that I can do here. So since on my 4 hour, it's showing that it's going to pull back and wait for price to come back towards my moving average, and then buy it back up using that 15-minute chart. Or if this turns out to be a larger pullback, you can trade against the trend. And I don't recommend any of you guys to trade against the trend, right? You kind of have to know what you're doing. But the thing is, you're not going to get a very long time period to trade this against the trend. So I'm always going to suggest that you trade this with the trend. So after the pullback, then you get in it for the buy, because if you get a bad entry in the buy, the momentum of the trade is going to take you into the positive territory. Whereas if you try to trade a a sell here, price pushes down for a minute and then it goes back up, and you could lose this trade easily, right? It's no different. If you look at all these bearish order block, you get 1 4-hour candle. Now, 1 4-hour candle is what? About 4 or 5 15-minute candles. Actually, there are 4 15-minute candles in 1 hour. So 4 times 4 is 16. So you'll have a lot of 15-minute candles, but you're still kind of gambling if you try to trade the pullbacks, right? I don't recommend that, for a newer trader, right? If you're a seasoned trader, then it is what it is. It's still harder to trade pullbacks than it is to trade the proper direction. So all I do is drop down, and if my 1 hour chart agrees with my 15-minute chart, right, then I can trade the direction of that move. And I only, I'm only looking for 3 candles, 4 candles, right? And I want to get out. That's kind of where I'm going with this. Now, if you're trading with the trend, you can leave your trade in, but that's going against what I'm trying to do, right? I'm trying to trade and get in and out, more of a scalper's mindset, right? And maybe that's an hour a day. Maybe it's 45 minutes a day. Get in, get out. It's not hard to do if you identify the trend and then you identify when the trade is going your direction. For those of you who generally trade, with me or whatever on the swing side of the house, this is a easier thing to do when you identify, okay, this trade is going up, right? Everything about this trade has kind of worked out, right? Like, this was the area that we've identified for this price to turn around and go up. Now we get a daily bullish order block. So in this case, I would wait for this to pull back. And once it pulled back and turn around, I can get all kinds of, 1 hour, 1 hour burst, or 15-minute burst. I don't have to necessarily sit on an eggshell waiting for this move to happen. So it's just a newer strategy, if you will, that I've been working on for myself, right? And again, if you notice the moving averages, right? I expect this moving average to come down and get close to the 20 and then push back up. But moving averages are lag indicators, all right? What that means is the price is going to do what it's doing first, then this moving average will follow, right? If you already kind of have an understanding of what price is going to do, you don't have to wait for the moving average to give you an indication of something that's already happened. But I am definitely waiting for a pullback, right? And then it'll push to the upside. And yeah, we paid, right? So if you're swinging, you can still hold this, because I think it's going to push back to the upside. This is kind of all part of the plan on what we've been waiting for, right? Price break structure to the downside, break structure back to the upside. You get the pullback. Now it should push up. All right, this is a classic chalk change of character move, right? We should get price pushing back up to the upside. Any questions? Does everybody have a trading plan? I used to ask this a lot. I haven't asked in a long time, but is anybody struggling with a trading plan? If you're struggling with a trading plan, like drop a 2 in the chat. And if you have a trading plan, do you follow it? Few twos. Man, how come y'all never say that? Y'all just sit there and listen, and then you come back the next week. Nobody ever says anything. What is it that you're struggling with when it comes to a trading plan? If we don't have these conversations, like if you guys never say anything, then how is anybody ever going to know? And how are you ever going to make changes if you never say anything? What is the struggle? What is your struggle with the trading plan? Do you know how to make a trading plan? If you said you're struggling, do you know how to make one? Okay, Prince. All right. This is simple for you, Prince. You're relatively new to trading. You've been swing trading. So there are certain concepts that you understand, right? You understand a liquidity run on the daily time frame, right?
Yes.
Okay, let's talk about this real fast. So if you're a trader and you're swing trading, right? Let's just say you frame this trade up. And you come up with, you're going to take a long. And you're going to chase these 264 pips, right? I don't know you. I've never met you in real life, Prince. I know you hang out with some bad characters because you hang out with my son. But you whatever your lifestyle is, right? This is, let's say, a 277 pip trade that you can take. It's basically a 5% increase in your account if you just put one position in. If you trade this and actually trade it up, if you manage your trade, which means if you manage your trade and you add positions, this can be worth a lot more than 5%. But let's just start from the very basics. So the first objective of your trading plan is to you create a plan that will allow you to succeed, right? You have some goals in there, right? So your goal may be you want to chase 100 pips a week, 200 pips a week, whatever the case may be, right? Now, this trade is going to pay 277 pips, right? And it took 1, 2, 3, 4, 5 days for it to drop. So that's a whole week. It might take 5 days for it to go up. It might take 2 days, right? That's not the point. But the point is, maybe you're chasing 100 pips a week, which is fine. That can be your first goal. When you identify a trade setup, such as this one, then you have to write that in your trading plan, right? This should be the trade that you've identified that's going to give you your 100 pips in this coming week, right? Now, you can't do anything about unforeseen circumstances, wars, things that prevent you from succeeding. But if this is the trade that you identify, then you shouldn't be trading GJ when the week starts, or you shouldn't be trading US 30. You shouldn't be, you can't be profit watching. You have to hone in on your trade, right? Like this is your trade. So you write it down before time, like on the weekend while you're doing your studying, you identify these setups, right? This setup is based off of an order block and your POI. You already analyze this and price is going to go up. So this is a good trade setup. And it's going to give you your 100 pips for the week. Maybe it'll give you a little bit more. Maybe it'll give you a little less, right? But the thing is, you've identified the trade that's going to make you successful. You get in this trade. That's it. You know what I'm saying? You can't. This is your trade. You do your risk management. You write it down in your trading plan, and you don't miss the trade. If you have to get up at 10 o'clock at night, at 2 in the morning, you do what you got to do. If that's not feasible, then you set your parameters, right? And the trade either picks you up. This is a 55 pip stop loss, the way I have it drawn up right now. Maybe you can get it down smaller, or maybe you have to use the entire order block. Maybe it's a larger stop loss for you. But you've identified the trade, you take the trade, and you either win or lose, right? You write down in your notes what happened with the trade, whether you won or you lost, right? Hey, it didn't pick me up. Yeah, it sucks, but you can move on to the next week. This is how you are going to develop your trading plan, right? And this particular trade setup, you have to write down what it is, right? This trade setup is, you saw the market break structure to the upside, right? It pulled back. To your 78% mark. This is a great trade, right? Now, really, you could take this trade, if you're an ICT fan, you can take this trade right here. You can take it all the way up here. But we're getting into, we're way, ahead of ourselves. But the point is, it's a good trade setup based off of, the market moving to the upside. You get higher highs, right? Higher highs and higher lows. You get a pullback to the 78.6. You hop in the trade and you ride it up. That's what's going to make you successful. Basic market structure, right? Pull back. You got in at a discounted rate, and you're just riding it up. It's not fancy. It's not sexy. It's dry, but it's a good trade. And if you just trade like this, and you don't take any other trades, if you don't look at your little chat box that's blowing up with Will's people or Justin's people about the bot, if you just focus on this one setup, and you get you one setup every week, that's how you develop your trading plan. And you stick to your plan by not taking other trades, right? Hey, I'm only going to get into a trade. I'm only going to enter a trade once it pulls back past the 50% mark. That could be a rule. This trade qualifies because it already pulled back more than it. So I'm only going to trade on the London session. That could be a rule. I'm only going to trade the US session. That could be a rule. But you have to develop these rules. You're not going to have all your rules, right? But you develop your rules as you go. And as you find success, you just wash, rinse, and repeat, right? So if this is going to be your trade setup, right? If your goal is to identify one trade every week prior to the market open, analyze that pair, look for an entry, If it hits your entry point, it's good. If not, then you don't have a trade that week. If you do that, that's part of developing a trading plan. All right. You can't come to the market and just take, oh, I'm gonna take whatever Ty says. I'm gonna take 2 trades that Ty says. No, that's not the way you do it. You analyze the pair and you see what the pair is doing for you. You have a signal, right? So you hop in the trade and you ride it up. And you just trade this as a part of your trading plan. Maybe you're trading liquidity runs, where on the daily time frame, you get a wick past the low, right? So you see where this price wicked past the low? Maybe you hop in this trade immediately and you want to get this push, this initial push, 364 pips. Maybe you're only trading those daily wicks. You're going to be highly successful because that's all that is a liquidity run. You don't know how far it's going to push up, but I mean, 300 pips is pretty much standard, you know, whenever these things wick. This wick right here would have got you 300 pips. And, you know, if you're thinking, oh man, that's hard to do, Todd, it's not. It's not hard, because if you're disciplined, if you're a disciplined person, at the end of every day, you'll go and you'll look, you know, at 5 o'clock New York time, and you'll see which pair wicked past the lows. And you'll see them. But that could just be one piece to your trading plan. Whatever you're trading, whatever you see you can make money. The problem is you can't trade everything, right? You can't trade every setup. It doesn't work like that. You have to find one setup, 2 setups that you identify. I always find 1 or 2 setups that I like, right? Like this setup is one I'm taking. I'm taking this setup. You know, I've kind of waited on this thing. So this is a trade that I'm going to take, right? There's another setup that I personally like. We talked about this setup last week, right? We talked about it pushing up. We talked about it selling down. Well, guess what? It pushed up. Now look, we get the sell signal right in our area, man. I mean, it's not perfect, but this is it. This is how it looks. Price is going to push up to our area, sell down. And guess it pushed right up here. If you had taken this as a buy trade, it hit your take profit down here, but you could have held it, because we talked about hedging. A natural hedge is a buy to sell, right? So I know it was some people that were on this call last week that remember this, right? Push right to our area. Now it's going to push down. Now we thought that it was going to happen that week. You get this weekly sale. It's taken on the weekly chart. It's taken 1-2 weeks to push back into the order block. 3 weeks for it to start pushing away, right? This happened May 9th. So it's been a few weeks. But if you are following the price action on these pairs, right, you're abreast of what's going on. You've made this money. It's played around up here, but it's pushing down. So these 2 setups are ones that I'm personally interested in, right? And EA I like better than AC. I like the way EA moves. I like the pip count that I can get. But if you look at this one, see how the price wicks past these highs. Look at the sell down. It's just a matter of you coming to the charts with a clear head, looking for your setup, right? and then taking your setup and making it work, right? That's how you start developing your trading plan. The rules come as you go, right? Like as you see flaws or areas that you can improve, you can create a rule, right? It's kind of like when I'm doing my little scalping plan. 3 candles is it. I don't need more than 3 candles. It's attractive to get 5 candles, right? It would be great if I can get in for a sale right here on the 15-minute chart and get 1, 2, 3, 4, 5, 6, 7, 8. Come on, man. This is a pipe dream, right? This is the equivalent of getting a winning lottery number, right? It can happen. But if you go looking for this, if you have to hit the home run on every swing, you're going to be broke. You'll never be a successful trader. All right. Successful traders, they live off these 3 candles, right? That's how you become successful. Success in this game looks a lot like baseball stats. you might win 30% of your trades. But if you have rules, that 30% that you win, you'll make A-Rod money. You'll make Derek Jeter money, right? We'll just stick with those baseball analogies. But it's not sexy. It's not hitting the home run every day. But it's just collecting your 2 or 3 candles and going about your business. You're not going to get rich overnight. Hopefully nobody promised you that when you started trading. It's not going to happen. You're not going to get rich overnight. Over time, you can make a decent amount of money. And what I like to do is I'll throw in a couple of US 30 trades when they're like givens, right? When the setup is there, I'll jump in the US 30. So that's what works for me. And that's what, especially this year, has been working great, because we get these crazy US 30 moves, but that may not work for you right now. You might not be ready for an indice. You might not be ready for a CFD. You might just be ready for currency pairs. Trade the currency pairs, trade the setups, develop your trading plan. Does that make sense, Prince?
Yes.
So stay out of the US 30, unless it's a demo thing. I got it. You're in a demo account, but you need to start working. You need to trade your demo like you would trade a real account, right? Everybody's demo, you should have a demo set up like a real account. Whether, if you're practicing for, one of these challenges, then your demo should be the same size, same leverage, everything. And you should only take the trade setups in your demo that you would take in a real account. That's how you follow your trading plan. Now, if you're going to screw around and trade the indices, you need to create a separate account. Because I'm not saying don't go learn how to trade something different. But what I'm saying is, if you're just learning to trade, you probably want to stick to one asset class, and you need to trade it and get comfortable and familiar with that. Become successful with that one asset class, then you can move on to something different. For a long time, I didn't trade the indices. When I first started trading Forex, I came in for NAS, and then I got road graded. So I stopped trading the indices for a while. I just traded pairs. I found some level of success with pairs, and then I went back to trading NAS, and then I moved to US 30. So that's kind of how I went about developing a trading plan. But you have to start somewhere. You have to add the rules as you go. It wasn't, until around Thanksgiving-ish that it really kind of dawned on me that more is less, right? Or less is more. Taking less trades adds more value to your account, because your trade setups that you see when the market isn't moving are probably the best trade setups. Then once the market starts moving, you think you see a lot more setups, right? Oh, this is setting up. This is setting up. Oh, that trade is good. No, don't do that. Just trade your setup and go on about your business, and then your account will grow. As far as me sticking to my plan, uh, for the most part, I do, right? Every now and then I will deviate, and that's when the indices set up, with one of those waterfall moves. Then I will take those trades, right? But in general, I'll take one or two trades per week, in my funded account. And there are trades that I look at on the weekend and I identify on the weekend, right? And with those trades, all I want to do is make my 10%. So let's say I get in this trade and it moves from here to here and I made my 10%. I'll set my stop loss at my 10% and I'll just let the trade run. So if it comes back and stops me out, which a lot of times it does, I've made my 10%. It's incredibly easy for me to pull 10% out of the market now because I've done it so many times and in a lot of different ways, right? Sometimes I over leverage and get 10% if I know the trade is going there, right? I'm not encouraging you to do that, but what I'm saying is after you do it a few times, right, then you kind of understand when and where you can get your money. And it's really no different than if you're in a trade on the daily, like this bullish trade that we talking about. If you all take this EA trade, at some point on Sunday, maybe Sunday night, tomorrow night, this thing is going to push down and it's going to turn around and start heading up. If you can catch that trade, once it starts pushing up, those first 1 or 2 1-hour order blocks, then, you can go heavy, for an hour or two and you'll make all kinds of money. Your 10% will be made, right? Because that trade is going to push up probably for 3 or 4 hours before it pulls back. But I mean, you kind of have to just jump in and figure out what works for you and how you can be successful trading that trade. That makes sense? All right, so drop a 2 in the chat if you still don't understand trading plan. I know that was Prince said he didn't understand it, and I kind of addressed his concern, and I kind of went off on a tangent, but if you still don't have a clue, I need you to let me know. So does your trading plan need to have a pip count? I think it needs to either have a pip count, or a realistic dollar amount, right? If you say you want to make 30 bucks a day, that's kind of dangerous, right? If you're a swing trader, I don't think that's a good number, right? Because you're not really in control of that. That means you're going to the market every day looking for a setup that's going to take place that day. I don't necessarily agree with that. I think you can say you want 100 pips a week. You identify a swing trade that might give you 100 pips a week. If you're a short-term trader, maybe you're looking for 15 or 20 pips a day, right? And you can identify a trade setup every day that's going to give you 10 or 15 pips. The problem with that I have with people who look for intraday setups is if you can't do your own analysis on the weekend, then how I'm not really convinced that you can go every day and do analysis every day and find a 10 or 15 pip move. If you don't have time to do it every weekend, then I think you're kidding yourself on having time to do it every day to go look at the charts and find 15 or 20 pips. Theoretically, it's not hard, right? All you need to do is find a 4 or 6 hour order block going in your direction, going with the trend, and you can probably get those pips. But I don't know that you're actually doing that, right? So if you're interested in trading a lower time frame, let's say you're trading a 4 hour, the concept is the same, right? If you're trading a 4 hour time frame, there's a bearish order block. You could have traded this down, right? There's another bearish order block. You could have traded it down. Now you get the bullish order block in your area, right? This POI, this is our point of interest for it to buy. So once you get this bullish order block, you could have immediately started trading this thing up. You get another 4 hour bullish order block and it really explodes, right? It's the same concept. It's just a different time frame. Do your analysis when you don't have anything else going on. Identify your setups. Take the trade. All right. So anybody else struggling with trading plans? Lexi, Alicia, Rhonda, Nadia, Kenya. I need to hear from y'all. I need, drop something in the chat. Do you better understand how to develop a trading plan?
So I better understand it, but I guess where I'm struggling is if I want a goal of 10% a week or even 10% every 2 weeks, how do I correlate that to the pips and the challenge account size? Like, I'm just trying to figure out which account size I need to do and not violate the drawdown.
Well,
and yeah.
That's a good question, Kenya. So every time you use a long and short position tool, right? You see how up here it has a target amount. This ratio right here, this ratio 4.99. That's basically 4.99%. You take this trade and you enter here and you get out here, you're going to make 4.99%. One trade, 4.99% when it's finished. So if you equate that to a challenge, most challenges, you have to make 8%. Some you have to make 10, but the better ones, you only have to make 8%. So if you took this trade and you won this trade, your account value would go up by basically 5%. And you would need to find one more trade that makes you 3%. Okay? So here's a trick. You can enter this trade here, and once it starts going in your direction, because this is a daily setup. This isn't a 4 hour setup, right? It's a daily setup. But once it pulls back on the 4 hour, you can find another entry and that would give you another 4%, and you pass your challenge with this one trade, right? Or you can find an entry on the 1 hour and you can mark it up on the 1 hour and it'll pay you whatever that ratio is. Do you understand? Does that make sense?
I think so. And then you do your risk, you do the proper risk management that you taught, like the formula for your lot size. And that's
Your proper risk management is a every time thing that never changes. Never changes. So let's just look at this in reverse. Let's reverse engineer this thing, okay? So let's look at this move on the way down, right? The market sold. I really need to look at one that tapped in because that market fell off the cliff. It didn't really give us an entry. Okay. So high as we know this market fell, but we're just gonna, I gotta find an entry. So I'm kind of gonna make it up. All right, the market came up, gave us tweezer tops. I'm gonna measure this move. Market pushed down. It pulled back to the 78.6. You could have entered right here. Pushed down, it pulled back another 78.6. You could have had an entry right here. I'll take that back. I don't want to use this because I don't want to confuse anybody. I want to find one that kind of marries what we teach. And there's nothing. Okay, let's look at this dollar British pound because it at least taps us in. It's on the daily, right? This would have been your order block, right? Kenya, for the way you understand and the way you trade, you cover the entire order block, correct?
yes.
So we're going to trade from this order block to this order block, right? You agree with that?
Okay.
You're saying okay, but do you understand why we're doing that?
Yes.
Okay. So if we look at this trade setup, our stop loss is about 54 pips. Our target is 247 pips. It's a good trade setup. It's a clean setup. It's on the daily.
So I think my stop loss would have been the whole wick of that
Okay,
red
all right.
candle.
Wait. We'll do that too. We'll do it too. I'm just
Okay.
gonna replay this. The red or the green one?
The red one. Well, I guess it needs to be the green one,
No.
but it would have
needs to
been the
be-
red one.
No, it needs to be the red one. It doesn't need to be the green one.
Okay. Okay.
All right, let's say your stop loss is 85 pips. We're gonna do this easy, okay? You have a calculator. I know you got a calculator on your phone. So check this out. You got a $10,000 account, right?
Okay.
You're risking what for this trade?
I'm risking
1%.
$100.
That's right. 1% is $100. Your stop loss is 85 pips. What's your lot size?
Hold on. My stop loss is 85 pips.
Yep.
.11.
So 0.1. So it's a 0.11, right?
Right.
Okay. Okay. So if you win this trade, you're gonna win 2.91%, right? You start with 10,000 bucks. See how this number is the same? I mean, see how it does the math for you?
Oh, okay.
If you win this trade, your account value is going to be right here, right? If you lose this trade, you're going to lose 100 bucks. You see that?
Right.
Okay. I want to drop down to the 4 hour. Okay, we're in the trade. See that? You agree we're in the trade? It tapped us in?
It tapped me in. Okay.
Okay, now you're in this trade, you're up a little bit. Now, what I personally would do is I would drop down to the 1 hour, right? Now, what I want to see at the 1 hour is I want to see a pullback, and then I want to see a bullish order block down here. I could have got right there, this bullish order block. I'm already in the trade. Does this make sense?
But I wouldn't have known that that was going to be a bullish order block until it's already in the past. Oh, okay.
Stop. You're following me, right? We talked about the setup. We talked about the setup. It tapped, the trade had already tapped us in, correct?
Right.
Now, all we did was drop down to the 4 hour, to the 1 hour, and wait for a bullish order block. It just so happened that it pulled back further and gave us a bullish order block here, which is better. This is actually a better entry than our initial entry. the trade is still going our direction. We're still confident that this is going to be a buy, right?
We should be.
Everybody, drop a 2 in the chat if you understand. If I have to explain this further, I will, but drop a 2 in the chat if you understand. I'm showing you a real life example of how you qualify an account using one trade setup. Now, I didn't use any tricks. Now you see this second trade setup?
What?
Yeah. So you're going to make 20%, right? Does that make sense?
Yes. So I would have done the same thing. Like I'm watching the 1 hour.
Well, I hold on. I just explained exactly what we were doing. As soon as you got tapped in, then you drop down to the 1 hour, right? Is everybody clear on that? I mean, I don't mean to cut you off, but I don't want you to change what we're talking about. We identified the trade setup on the what? The daily chart,
Daily.
right? Right? Are you following me?
Right.
Once the trade tapped you in the trade, then what did you do?
I dropped down to the 1 hour.
Drop down to the 1 hour. All we're looking for is what?
A bullish order block.
Because this trade is bullish. We're looking for a bullish order block to get tapped in for the trade to go our direction. No tricks, no gimmicks. Just that's all we did, right? Now, this second setup gave us a better situation. So this is what we're going to do. This is a 13 pip stop loss, right? You follow me?
Yes.
We're still risking $100, right?
Right.
All right. So you're going to have 2% risk in this one trade, which is fine. It's the equivalent of taking 2 trades. So $100 divided by
13.
13 is what?
You end up with a 0.76 lot size.
Man, this thing is in the way. So if you win this trade, your account is going to be $12,777, right? Oh, I moved the original. But you get the picture, right? Trade is over. Now, you've made 20% on the second trade, and you made 3% on the first one. So you made 23% in one trade, right?
Right.
Easy money. Easy.
Okay, so let me ask you this, because we did the analysis. We started with the daily, which means it may or may not play out between Monday and Friday. Is that a correct statement?
I disagree. I think it's going to play out starting the next day. Now, we don't know how long it'll take that trade to finish, right?
I guess that's what I'm asking.
Yeah, you can never control the length of time that it takes to finish.
Right. So the challenge accounts allow you to hold them over the weekend, but the
some of them
accelerated
do.
account does not.
You can't
So,
worry about that. You
oh,
if you got to close on Friday, you close on Friday. As long as you close in profit, what does it matter? You're gonna find a new setup the next week. Here's the thing. We can't worry about how much money we're gonna make that week. The goal is to make money, right? You might get into a trade that runs buck wild and you make $5,000. But that's the exception to the rule. That's not the rule, right? You might get into a trade that you think is going to make $5,000 and it makes 50. You still made money. If you make money every week, eventually, well, if you know how to manage your money, right? Like if you know how to take care of your money and you make money every week, eventually you're going to make you're going to have a lot of money. You're going to make more money than you can actually spend. So I just showed you an example of how to take a trade that you had that trade as making you 3%. And I showed you how to make that trade make you 23%. If everybody in this room can make 23% in one of those trade setups, everybody would do it. I didn't do anything special. I didn't do any tricks. It's just a different way of looking at your trade. Like you already identified the setup. Now all you have to do is find out how to make that setup generate a larger sum of cash. That's what I mean by it's easy for me to go in and pull out 10%, because the hard part is identifying a setup. Once you can do that, then there's all sorts of ways you can manipulate money from that trade setup. It's not, I mean, I'm not special. I'm not gifted, like I'm a regular dude who's doing the same thing that everybody else is doing, who's taking trades based off of what these charts are saying. All I'm saying is if I'm in this trade, then I want to try to maximize my time in the market, right? I'm trying to maximize what the market can give me. And to be honest with you, we're not even maximizing it, right? Like that's risking 2%. A lot of people would risk a lot more percent than that. But this is just a very safe way to go about, making the market give you what it owes you out of that trade, right? Like we're all risking our money or our accounts by entering this trade. So once it taps you in, you might as well get your more bang for the buck. And all we did was drop down because we've already analyzed this on a higher time frame. Now all we have to do is get a lower time frame entry. Some people could drop down to the 15-minute and get even a higher risk reward. But I don't want you to do that without being experienced, because if you jump in on a 15-minute, it might roll back on you and you lose that position, right? But the point is, you already have the power to generate the type of money that you dream of generating. You just don't have the roadmap, right? Like you don't have the trading plan that's allowing you to do that. And all I'm trying to do is give you give the power back to you. Like I don't need the power as the guy that's hosting this call every week, right? I want to give you the power. I want you guys to take control of your trading. Don't wait for me. It's one of the reasons why I stopped going to that 5 o'clock call every day. It's like you're all depending on what I say. That's not the purpose of this forum. The purpose is for all of us to be individual traders, and I can tap in with y'all and be like, hey man, I'm struggling this week. What setups are you guys looking at? And then I got 30 people dropping setups. That's the goal in my mind, of having a community of traders, right? Or if you're, sometimes you're not going to see the market clearly, but maybe Elfie or Leandra or Sean or somebody is seeing the market better than you. And because you know them as traders, in this community, their analysis is normally pretty spot on. You can ask them what they see. I used to do it to Alicia all the time. Alicia wouldn't even trade her setups. I'd ask her, man, what you see, Alicia? She'll break it down. Des, all the time. Hey, Des, can you look at this analysis, man? Man, Des to get on there and do whatever she does with her Dr. Funko glasses on, boom. Des will have that thing broke down in the market to do exactly what she says. So, you might feel like that now, but trust me, this is only the beginning, and you're going to get there, but you have to kind of take time and do some studying on your own. You'll be surprised on how much you know, right? You just kind of have to go and do it. You have to set aside some time where you can sit by yourself and analyze the charts. But what I just did is not something that you weren't capable of doing. You already understand order blocks. They work the same way on every level. You just drop down and you get in on an order block and it taps you in and you go. That's all. That's it. Man, this is crazy. But that's how you develop a trading plan. You just need one trade every week. One trade every week. That's what I was saying. You don't have to have 30 different trades. One trade every week. That's 2 entries. You could have had 5 entries on that same trade. I don't suggest that, but I'm just saying you can really maximize that trade and you can get paid an astronomical amount of money on that one trade setup all week, Kenya. So just like you said, oh, you don't know if you're going to get those 277 pips that week. You don't know. You don't know. But trust me, it's some people that I do know. I know people that will go in and have 7 different positions in that same trade. And me and you might make, $1,000. They'll make $20,000. That one trade. So there's plenty of meat on the bone, per se. But you have to start by developing a trading plan. I'm going to take this setup, whether it's a liquidity run, whether it's that daily setup, you're going to take that trade setup, you're going to enter, or whatever, you're going to exit. I want to collect these 50 pips. And once you get that down, it'll start working like a machine. And then you'll see other things. Okay, well, I can enter twice in this trade. Oh, I can enter 3 times in this trade. Whatever the case may be. And you can just add to it. Does that make sense?
Yes, it really does.
Okay, so for you, Kenya, I shouldn't, your trading plan should be developed. Like y'all have to take time to get on your laptop or get you a notebook of your old school and write this stuff down, because you're going to forget. Write it down and start developing your trading plan and add your rules to it as you go. Like what time frames you're trading, what currency pair you're trading, whatever, right? If you're going to get into a GU trade, you're either going to have to trade the US session or the London session, right? Maybe you wouldn't have been able to drop down and find that move that was 6 hours into the trade if you weren't awake. All right. So if you're trading a US session, then maybe you have to take those trades, on UCAD or USD Chef or whatever. But the point is, they're out there every week and they happen all the time. It's just a matter of you actually going in and doing the work by looking for it. Lot sizes are super important, you know. But if you never scale down and drop down and use your time charts, you can never reap the benefits of the larger lot sizes, right? And the risk management will tell you what lot size that you can use. So you're never guessing about your lot size. It's just 1%.
Speaking of which, Todd, can you please do that again, what you did with short and long position in order to set these parameters, please?
Okay. So right here, if you're going to take a long, right? Let's say we're going to take a long position here. When we set our long position, or we set our trade up, it's going to tell you everything about your trade. All I do is double click right here. And here's your inputs. You can put your account size here, right? What you're risking, entry price. This will tell you how many ticks it is, 75 pips. All you're doing is saying, hey, I'm taking a 1% trade, you know. It's going to give you your lot size. You're going to put your lot size in.
But it's not 0.0 something, it's just whatever is past the zero, I mean, past the decimal on the lot size, or?
But yeah, but so when you put your risk, it's going to automatically add your decimal, right? So if your risk is 1% and you put, and it's supposed to be 0.73, it's going to know that that's 0.73. If you risk 10%, it's going to be 7.3.
Okay, so but for the MetaTrader, then I would still have to put in the 0.73.
Yeah, so, okay, yeah. MetaTrader is different.
Right,
This is just your analysis.
yeah,
Yeah.
okay. And ticks is the same thing as pips? It's
Yeah,
synonymous.
for this, yeah, for this tool it is.
Mhm. Okay, thank you.
And just for everybody's information, you can YouTube a class on how to use these tools, right? You'd be amazed at the information that's out there. You guys have any questions? Any other questions?
Can I just say thank you, Todd? Because I think you might have just changed my whole life.
But I mean, you're welcome. You know, you guys are changing your lives by showing up. You know, like y'all, you guys are like the team, right? It's only us going forward. So the stronger you are as a trader, the better the community is. And Leandra, it's easy for me to stick to a trading plan because
why I'm asking these questions, not for me, it's for like everyone else.
Oh, well, okay. Yeah, it's
like why, like, how do you stick to your trading plan? Like,
so you get
what
tired.
has helped you in your journey to, you know, stay disciplined and stick to your trading plan? I think a lot of people will benefit from that answer.
So listen, losing helped me stick to my trading plan, man. Like,
wow,
$67,000 or 60, you know, whatever, $57,000 helped me stick to a trading plan. When you lose the amount of trades and the amount of money that I lost, at some point you'll do anything to win, right? Man, y'all don't understand, man. Me and my brother was, whoo, man, we lost every trade, y'all, every trade. I mean, imagine the gut punch that you take trade after trade. I mean, you know, we laughed about, you know, we we would have been better traders if we just went and clicked buy and sell every now and then, like randomly. We would have been better traders. But it was because a lot of times it was because we didn't understand the time frame. Like we were probably just in drawdown, and maybe we used too big of a lot size, or or whatever. So once somebody showed me something that worked, then it's easy to stick to it, because you get tired. The losses mount up, man, and your confidence takes such a beating that you get beat into a position where you just, I'll do anything to win. And then you take these wins. The hardest thing to do, or hardest thing for me to do once I started winning, was to manage the trades. Like, you want to take every setup at that point, and you can't do that. How did I bounce back from losing 60 grand? Shoot, man.
Yeah.
The way the way to anybody, I mean, you just trade, man. To be 100% transparent with y'all, my situation was different financially. Like I don't own a house. I didn't have a lot of bills. My brother would say, "Oh man, you're a tightwad with your money. You live cheap." I had a ratty apartment. I didn't have a lot of money going out. I made a decent amount of money. I'm a retired veteran. I get a disability. I had a lot of income coming in. So the 50,000 or the 60,000 that I lost, it wasn't something that I felt like I missed a meal or it changed my life. Like, I can blow $5 grand in Vegas every week, maybe not every week, but at least once a month without blinking an eye, so I was making that money, so it was either I was going to spend it on something, like y'all spend money, y'all spend money on whatever you spend it on. Maybe you don't spend the amount, but I'm older and I had the income to spend like that, so it was, for me, it was just a matter of figuring it out, right? Yeah, Elfie, it's recorded. So for me, it was a matter of just figuring the trading out. Now, once I figured it out, I mean, that money came right back. I mean, it's nothing to make that type of money. I just showed you that you can make 23%, in one trade. There, and if you risk more than 1%, which I don't suggest you guys do, right? But at some point in your trading, you're going to know when you can risk more than 10%. I mean, more than 2%, right? Your setups, you're going to see these setups, a liquidity run, and you're going to know the market is going to run your direction, and you're going to know you can go in at a larger risk, right? But once you get an understanding, and you start understanding that, hey man, these concepts are concepts, they're real concepts, and they work every time, or they work in the high 90s, you're gonna get a confidence about trading the same way you get with your job or driving to your job. There's always a chance that every time you get in your car, you can have an accident. And then there's a smaller chance that accident can be fatal, but it doesn't stop you from driving. Everybody hops in their car, and most of you hop in your car and you drive faster than the posted speed limit. It's the same with trading. Once you learn how to drive, as far as a trader, you just hop in your car and you drive when you see the setups, right? You kind of trust that the setup is going to work itself out, right? And as long as nobody does anything ignorant, like invade or blow up something, the trade will pretty much go your direction. And if you lose a trade, if I lost a trade and I lost 2%, I would be pissed, but it wouldn't be catastrophic. I would still have my account and I would live to trade the next trade. And that's all that really matters. Because I do this weekly meeting, it forces me to look at all these different pairs, and I see a lot of different setups. And all I have to do is pick which one or two that I like the best. And I watch the charts, I set my alarm, and once my alarm goes off, I get into the trade. It's not hard for me at this point. It's kind of like I don't even think about it. But when I first started doing it, I had to write everything down. Like I had I still have a book, a composition book that I write pairs down in. When I made my son learn how to do this, I used to make him write down the prices every week of every pair. And what that does is it forces you to go back and look at what happened, how price went from one place to the next. Now that, you guys have order blocks and all that stuff. I didn't have any of that when I first started trading. I just kind of had to fumble on a lot of this information, whereas you guys have it and are given this information for free. I think it should all be given for free, because even though everybody on these platforms in this Discord is giving you this information for free, doesn't mean that you guys are capitalizing on the information. A few people have passed challenges, which is awesome, but the goal is for everybody to trade funded accounts, everybody to excel and learn, as traders. That's the goal, right? The goal is not for me to be blabbing for an hour every Saturday. At some point, somebody else is going to be up here blabbing, and I'm going to be living life. I just want to tune in, from a beach somewhere, or and hear somebody else's analysis while I'm collecting money. That's the goal. And whoever's doing this, this might seem like, it's uncomfortable, whatever. But whenever you have to do this, you have to prepare yourself. So it gives you the advantage, because you can go and you can look and you see moves, you see setups that you wouldn't ordinarily see, because you're looking for things to talk about on the next week, on the weekly call. And you can use other things for confluence, like these moving averages, or whatever you use, whatever you're comfortable with, whatever concepts that you understand as traders. There are a lot of brilliant traders out there that don't trade smart money, or it's a lot of brilliant traders that do trade smart money. They just trade it a little bit differently than you trade it. But if you look at their content and you marry it up with what you already know, it makes you a more powerful trader, right? Tomorrow there at the intro to smart money class, we'll be talking about market structure part 2. But market structure is important to everybody. It should be important to everybody, because it tells you everything you need to know. If you just look at these charts, you can see how you get the lower lows, and then all of a sudden you get a higher low. This is a swing point, right? Which lets you know that this market is pushing up. It doesn't matter what these letters are, what pair this is. The important thing is that whatever pair you're looking at here, you know that it's transitioning from a sell to a buy on this time frame. And that makes you super powerful, as a trader, because it gives you the advantage over the market. Now you're just looking for entries to take the position back up. So hopefully you guys have taken from this meeting, the importance of a trading plan, right? And the importance of identifying your setups over the weekend, or whenever you have downtime. Take your plan, find your setup, and execute your plan, right? If you're having problems sticking to your plan, it's because you don't have a plan, or your plan is shitty, excuse my French. But if you have a good plan and it's working, you'll stick to it because you're tired of losing. This plan works. what I showed you works. And I'm not telling you what I think, I'm telling you what I know. This plan works. So it's easy for me to stick to it because it works. You guys have anything else? Anything else y'all want to talk about? So next week.
Thank you, Todd, for that.
What's that?
Thank you.
Oh, you're welcome. But next week, everybody should show up here with a trading plan. Even if it's not 100% solid, right? It's you got to start somewhere. You got to put the pen to paper. You have to draw up a plan. Hey, I want to make 50 pips per week. I would personally work with the pips over the dollar amount because dollar amounts can be manipulated, right? You want to look for a specific pip count, right? Once you could identify, hey, I can make 50 pips a week. Now you can generate the dollar amount with those pips, right? You can fit your lifestyle around some pips. All right, so I'm gonna stop the recording. I mean, we've been on here for a minute.
Wait, I got one last question before you
Okay.
stop it. What are all the elements that need to be in my trading plan?
Elements. So I think your plan needs to, again, it needs to be drawn up around concepts, right? Not strategies. You know the difference between a concept and a strategy?
I mean, smart money concept versus wheel strategy. I can give you an example, but no, I don't think I understand what you mean.
So a strategy is a gimmick or something that you do that works, right? It may not work every time, it may work every time, but it's just something that you do because the market does X, I'm going to do this, right? That's a strategy. A concept is a concept happens every time, right? Basically, a liquidity run is a concept that happens in the market. The market makers take liquidity from the top to the bottom or whatever, right? Or the market moves towards liquidity. Those are concepts. So if you can see liquidity, you know the market is going to move to that liquidity. You can develop a strategy that'll take advantage of the market moving to that liquidity, right? So the elements of your trading plan needs to be built around concepts, right? And the concepts, there are several different concepts out there, but you need to pick a concept or a series of concepts and develop your trading plan around that concept. I personally like to use the daily order blocks or the weekly order blocks, right? I want to start there. And I want to move, in the direction of the market. And I want to collect a certain amount of pips, right? 100 pips a week. Now, in that 100 pips, I can make $100,000 because I understand how to drop down the time frames, right? But I want to base my, I want to take all my trades starting at either a daily or a weekly order block. I don't want to just hop in the trade in the middle because that's when I run into problems. But I'm taking my trades at the daily order block or the weekly order block. That's a rule that's in my trading plan, right? The trade setup that I like the most is I like to see a weekly order block going in one direction, like a buy, and I want to see a daily order block going in the opposite direction, a sell, because I want to be able to. To me, that's a hedge, a natural hedge trade. I'm going to sell the trade in order to buy it. That's perfect for me, and it works very well because a lot of times they don't both happen the same week. Maybe it'll sell this week and then it'll buy next week. You know, again, we don't control the time. All we control is the setup. All we can do is enter the trade. We can't control how long it takes that trade to take place. I think you need to set the number of trades. I think that's very important because everybody in here has a little attitude and they can and will revenge trade. So you need to set that, you know, you need to write a hard rule about how many trades you're taking per week. You know, if you lose 2 trades this week, you should be done. 2 trades in a week. What that does is it forces you to be picky. You know, you're picking your trades because if you lose 2 trades, you're done. And if you lose 2 trades every week, that's 2% that you've lost. And it gives you 3 weeks before you blow your account. If you're trading an accelerated account. And generally speaking, you know, 3 weeks is plenty of time to win some trades. But you like those are the rules that made me successful. You know, maybe those rules don't make you successful. But what I found for myself was the more time that I give myself, the better my results are, right? So if I give myself 3 weeks before I blow an account, I'm not going to blow that account because I'm actually going to come to my charts and look for good setups every weekend. So even if I have a bad week, and I haven't had a bad week in a long time, but even if I have a bad week, the next week will always be better because I can identify a good setup on the weekend. And it's not a coincidence that I haven't had a bad week. It's because the practice, right? I agree. When the markets are moving, it is more pressure. And when the markets stop, you can see kind of what happened.
No, I mean, when you put less pressure on yourself.
You know, why would you put pressure on yourself?
Like, no, I mean to rush the trades.
Yeah, I just think that
or to complete the challenge in like a certain amount of days.
Oh,
when
yeah.
You less pressure on yourself. It's easy. You can think clearly in the markets.
Yeah, listen. 30 days is plenty of time to complete a challenge. You know, a lot of times people press, but don't worry about the time, yo. Even if you don't win your challenge in 30 days, you know, I talked to somebody about a week ago, and she paid for a challenge over a year ago. And since she never made her 8% or 10% in the challenge, but she never had a losing month. And they just keep renewing it. So she paid for a challenge over a year ago, and she hasn't passed it, but she hasn't failed it. Does that make sense? As long as you're not in the negative, they're gonna give you another opportunity.
Yeah. Hello.
Yeah, I think that's pretty funny. I was like, man, how can you not pass but not fail? But you know, her risk management is great. Hey, Elfie, everybody's listening to your conversation. Let me mute her. It's not like y'all understand German anyway. But it's, you know, I just think that that once you pass, you know, I think you understand kind of what to do. Not that you can't blow your account after that, but you do more to protect it, right, right, Leandra?
Yeah, 100%.
Yeah, because the challenge is all time based, but you don't. There's no time limit and no set amount you have to make after that. And here's the beautiful thing about once you get funded, like Leandra, let's just say that you go in the drawdown on your account, and you can violate. You can go 10%, right, on your account, 10% without violating.
I think it's 5. Yeah, I think
Oh,
so.
It's 5% a day. I think 10% overall.
Yes, you can.
Yeah, the maximum loss is 5,000.
Yeah.
You said the maximum loss is what?
5,000.
For a $50,000 account.
Yeah, that's
On-
10%.
Yeah.
Yeah.
So here's what you could do. Let's say you take some losses, you have a bad month, and you run that account, you're negative $4,98, right? Or $4,998. You got $2 before you violate your account. You can just wait for the end of the month. You know that? And the next month you'll start off fresh at $50,000.
Really?
But that's good to know. Thank you.
Yeah,
Yeah.
I mean, yeah. As long as you don't violate that account, they reset it every month.
Okay, so what about, like in my case, in
Your
a challenge?
No,
No?
your challenge is not the same. Once you qualify your account, it's like
Okay.
that. But the challenge is not the same.
All right.
But yeah, so
Definitely
any other-
about patience as well, like waiting for the right setups to come.
well,
Definitely.
listen, I think
The right setups that you were looking for your strategy or concept or whatever your
yeah.
plan.
So for
You need
me,
to wait for those. Yeah, definitely patience.
patience is huge, and I, I think that that's probably the number one thing that hurts traders once they know how to trade. But a lot of that comes because you guys, some traders only trade one instrument or one pair, right? You hear the traders say you got to focus on one pair. Well, that trade setup, that pair might not give you a setup. But I trade all the pairs, so there's always a setup. Does that make sense?
Yeah.
Yeah, I just look for the setups that I see on the weekend, and I'll trade the pair. Now, some pairs that I never really end up trading, like AUD Chef. I really don't trade that mess. On the daily time frame, lately it's been pretty wicky. Every now and then, I trade GBP Chef, but for the most part, there's always a setup that I like on a daily or weekly time frame. And because I trade multiple pairs, I'm never having to wait on the next setup. It's always there for that week. I might have to wait on my alarm to go off that week, but I don't mind doing that. The reason I don't mind doing that is because me and my brother used to get into trades Sunday as soon as the market opened, and we'd always get roasted out the trades. So I don't mind waiting. Any other questions?
You live and you learn, don't you, Todd?
Yeah. Well, either that or you live and you pay. If you don't learn, you're gonna keep paying. And sometimes those lessons can be expensive. Hopefully, you made it this far as a trader. Just stick it out, man. I can't stress that enough, because the reward, man, it's so great. You know, the feeling you get when you pass your challenge, the feeling you get, you know, at that when you realize that what you're learning works, like you know what you're saying and you can trust your analysis. All that stuff is super important. This thing, when y'all first started y'all's trading journey, you was paying whatever you were paying for a month for for your Discord or for your analysis. That was absolutely free. All you got to do is apply.
Did you cover US 30 today?
No, I didn't even talk about the US 30. Did you take the US 30 trade last week? Leandra.
Yeah, one moment.
Man, I'm tickled to death about this analysis. Look at that thing.
So Todd, when it's like that and it's stuck between like two order blocks, are you just waiting for it to break either the top or the bottom?
Pretty much. But do you remember last week when I said it was going to come to this green line?
Mm-hmm.
Man, that thing hit almost on the money. It went 50 points in drawdown.
Oh yeah, on our 5 o'clock call, I said I wasn't gonna tell you how right you was, but yeah, right, you was right.
Hey, man, hey, that thing lined up so perfect. I was like, God, dog, what that was accurate.
Yes, I did take that trade. But I'm at the moment I'm not seeing a clear direction on US 30, and I'm waiting.
That's good because it's not. So this is what I think. You know they're gonna raise interest rates. So
yeah, I'm just reading that.
So to me, this is simple. We talked last week about a higher point. Maybe it was right here.
Well, I think it was
right here.
It was either there or a higher point than
this is the imbalance. So I think the market is going
that you've got marked up, that it's going to pass through that and then go higher, possibly.
Yeah. So remember we talked about this liquidity right here, and we talked about this imbalance. The market is sitting in a bullish order block. I expect for it to push up, maybe reach these 2 points before they raise the interest rates. The interest rates will be raised. When is the meeting? FOMC meeting.
Wednesday the 15th, 7 p.m. 7 p.m. UK time.
I don't think it's let me see.
FOMC statements and economic projections.
Does it say rate?
No.
It's a red order. Yeah, that's also federal funds rate.
Does it say federal funds rate?
Yeah, on Wednesday the 15th, like she said.
Okay, so that's when maybe it'll go up next week, and then that following week it'll fall. Let me see this.
Week after, you're in the week before. As a matter of fact, it's 2 weeks after, 15th.
Don't you filter your calendar, Todd?
No, I don't.
Okay.
How do I filter?
Go back.
Filter at the top right-hand corner underneath search. Yeah, and just take off the yellow and gray. Not the orange, just the yellow and gray.
Oh, you care about you care about the orange?
Well, it might turn to red. We never know.
And the week after,
Core unemployment rate. Man, I thought it was next week.
There we go.
Yeah. So the 15th. Well, maybe it will go up all next week then.
Well, it has got a BOS, break of structure, and
That makes sense. So yeah, it's gonna go up. It'll go up to this level then. There's no way around it. But the 15th, it's all over. So yeah, the market is gonna reach these points. Maybe it'll go all the way to this order block, probably. Maybe it'll tap in and then push down. The 15th is like 10 days, huh?
is that 34808?
Right here. 3,
Yeah,
4.
on the monthly, there's a bearish order block.
Yeah, it's gonna tap in. It looked like it already did tap in right here. Yeah, this is just a higher spot on the monthly order block.
Yeah, like the 50%.
Yeah. So it makes sense. That makes sense. The market will go higher before pushing down.
Well, it's already tapped in. I don't know if you can see.
Yeah, it tapped in here.
30634. There's a monthly order block. It's a bullish monthly order block. You know where that wick is?
down
Where the
here.
long, yeah, that's where it tapped in again.
Yeah, but I mean, it's gonna come up here and then push down. See, this line right here is actually deeper into this monthly bearish order block. So it's gonna push up and then it'll push down.
So looking to buy, where would you enter?
Somewhere around now. Let me see.
So we'll just be looking for the bullish order block, possibly on the hour, maybe. Is that what you're looking for? Okay.
I'm looking for an imbalance.
Oh, the imbalance. Okay.
What you want? 15.
There's 2 down here. So this price is going to come down and fill this wick. There's a couple of imbalances that it can stop at either here or here. So I would look to enter for a buy somewhere around these levels.
Is that 32402?
You know,
That's where I've got my 50% of my fair value gap. Well, imbalance. Sorry, whatever you want to call it.
Yours is lower than mine. So maybe which time frame did you look at to get your imbalance?
I think on the daily.
I like mine better. Oh, you mean this one down here?
Yeah, 3-2. What is this? Yeah, 32402.3.
I don't know that it's gonna go down. I don't think it'll go down that far. I don't think the market will go down to 3.2. 3.24. I think it'll go. I think it'll go. The lowest I see it going is 3.2663.
Why do you see it going lower?
I don't see it going lower. I think that so this, if I put a fib from this wick to the pullback, this is a 78.6. See this black line right here? And it's right in between the two imbalances that I have marked up on the 15-minute time frame.
All right.
To me, it is confluence that this is about the area that this market is going to pull back to before it goes up. I don't think it'll pull back further than this area. I could be wrong, but I'm just saying, I don't think it'll pull back that far. I think this is about as low as it'll go before it goes up.
Order block.
What's that?
Oh, sorry, it's my mic on. Order block. I'm looking at the 15th. Sorry, I'm looking at my chart at the same time I'm looking at your chart. There's an order block on the 15-minute. The start of it. 32633.4.
Three, 2.
633.4.
Yeah, you're looking way over here, huh?
Hmm? I was back testing.
Okay.
No. It's up to speed. I think so. I think it is. What day is it today? The 3rd of June. Yeah. 32633.4. Yeah, the order block right there above. Well, I've just put the line above so you would know where it is. I can't read.
I think that this is about the right area.
Yeah, my order block is like close. Come on now.
It's close.
Right. Come on now.
Hey, I like it, Leah. I'm just saying.
Plus, there's an imbalance above the order block, so it's going to fill the imbalance and
Right.
then tap into the order block. So we are both on the same page here.
I agree.
That's tomato.
It's more confluence anyway, that, you know.
I definitely agree. I'm not trading this though. I'm gonna wait until they raise the interest rates. I'm gonna trade my EA, and I'm gonna let you make all that big money, that US 30 money.
What? So you're gonna wait until the 15th to
yeah.
US 30 again?
Yeah, I mean, it may not be the 15th, but yeah, you know, I think that right before they raise the rates, they'll sell it, you know. And that's probably going to be when the market is around this area.
So you're not gonna do like what do you call it, a Judas swing?
No, I'm not trading up like that. You know, to me, the EA is an easier move. It's a safer move for me. I don't mind trading the US 30 when it's going in one direction, but I don't like all these change of directions.
Yeah, that's how I've felt this week. That's why I've just been trading will strategy to get in and out. and not do any long-term or intraday positions, because it's just so uncertain at the moment.
I agree. But I like a lot of things about this setup. When I think about it, I think that the price needs to touch this 200 moving average. And I think that by going back up to this order block, that it's going to touch this moving average. I like to see the price go back and touch it before it comes back down. You see how price came from down here below the moving averages? It touched this moving average. And then, yeah, I would like to see that happen again. It come from below the moving average. I want to see it go touch.
And just bounce back down.
Yeah, it's definitely going to bounce back down because the interest rates are raising. I mean, there's a fundamental reason why it keeps selling, but I still like to see it touch.
Yeah, I know what you mean. On the 1 hour, it's got an order block as well. 326.
Is it bullish?
688.
Irish. Yeah, I mean, it's definitely money to be made.
But yeah, that's just where your entry is.
This is going to sell. This is sell.
Yeah, it's just where your entry is.
Heck yeah. I like that.
Lovely.
Awesome. So does anybody have any other questions?
Wait, I got a question.
Oh my God.
My bad. Wait, so EA, you was gonna buy it up to the weekly bearish order block? Or you were just gonna let it hit the 78 and just it was gonna break through the weekly order block?
Well, what I think, Prince, is that's a question that could be asked on that call tomorrow. Are you gonna be on the call?
Yes.
Yeah, and you could probably come up with your own analysis and see if we agree.
Okay. I have one more question.
Yes, sir.
On USD CAD, it had tapped into a monthly order block, and then it's still inside of it. And you think it's gonna go up? It's gonna go up. It tapped into a bullish order block, a bullish monthly order block.
Right here.
Mm-hmm.
Well, I mean, I think that's a good question. I think it's more complicated than so what's driving the CAD and what's driving the US dollar?
Wait, I don't know what you mean by that. Like,
okay, so what causes a currency to get stronger?
the interest rates?
Interest rates are the fundamental driver, right? So, as long as we raise our interest rates and we're ahead of Canada, then we might be able to stay on the bullish side of the Canadian dollar. But the Canadian dollar, what drives the Canadian dollar besides the interest rate? What is it based on?
You said where is what?
What is it based on?
Final drive.
What's that?
Well, I don't even know what he said.
Oil, the price of oil drives it.
Oh, all right.
So is the price of oil going up or down?
It's going up.
Which is going to cause the Canadian dollar to keep getting stronger. So you asked me if I thought it was going to break through this monthly like if this price is going to go up, that's an interesting question, because if the price of oil keeps going up, then it probably will. This will probably break through the monthly order block, and we expect the price of oil to keep going up. And the Canadian economy, they're raising interest rates too. Like Japan is the only crowns that aren't raising their interest rates for whatever reason, which is why that currency is getting killed. They're devaluing that currency like a mole. But as long as Canada keeps doing the right thing by raising their interest rates and they're able to keep pace, I expect to see USD CAD keep dropping.
Okay. Thank you.
Yes, sir. Anybody else? Anyone? Bueller?
So what's your predictions on the JPY pair? Do you think it's still gonna be bullish?
I do. I think that until it shows us something different. Like I thought the JPY pairs were gonna start selling, but so far they're still bullish. So until they show me something different, I'm gonna trade it on the bullish side of things. Now, I think that we're due a pullback on this. If you look at this on this daily chart, this is a break of structure to the upside. So I'm going to assume that we're going to pull back. We're going to get our regular pullback and we're going to keep pushing higher. It's kind of complicated because we're at a war and we're talking about a recession. So you would think that JPY would get stronger, but their monetary policy is not good right now. So it's not raising. So I'm just going to trade it as if it's going up until we start getting different signs from the economy.
When are they expected to raise the interest rates?
They're not. They're not. Like, for whatever reason, they're not raising the interest rates. Like the guy that I listened to, Cleveland, he kind of touched on that last week. I don't know why they're not doing it. They're saying that the economy isn't strong enough to raise interest rates. So they're still operating in a negative.
That's not good.
No. We'll see. We'll see how it all works out for them. Anything else before I stop the recording? All righty. So thank you guys for showing up. And we'll do the same thing next week. Tomorrow we're going to continue with our